If you've been considering buying a house in the last few months, you may have realized that the housing market's in a bit of an interesting place right now. Single-family house prices have rose a record 12% in January from a year earlier, which is the biggest annual increase going back to 1991. On top of that, 3 in every 4 homes sold in February sat on the market for less than a month, according to the National Association of Realtors. It's also becoming the norm in many markets to sell for above the asking price and all in cash. If you watch Bia Hiza, you would have seen an example of this in one of his most recent videos, where he tried to buy a rental property in my hometown of Dallas-Fort Worth, Texas. He bid on 3 properties at $30K over the asking price and was still beat out by other buyers until his 4th offer, which was listed at $340K, was accepted as he bid $365K. This is great news if you're looking to sell your house because you'll likely have a lot of equity in your home and then it will definitely sell for above the asking price. But on the other hand, you're not in a great place if you're looking to buy a home because of the competition in the market right now. In fact, this is probably one of the most competitive housing markets in history, which I'm kind of tired of living through historical moments as well. In this video, I'm going to go over the main causes for the skyrocketing prices in houses that are kind of ruining our chances of living the American dream and becoming homeowners. And if you get any value out of this video, please feel free to subscribe and like the video as well. This is my first video on this new channel, and I really hope you enjoy. So one of the biggest drivers in these home prices is the lack of inventory. In fact, housing inventory decreased to a record low of 1.03 million, which is literally only a month of inventory, meaning that if no new homes come onto the market, we're gonna be out of homes in a month. And all in all, we're short about 3 million homes. And of course, house prices are determined by supply and demand. And right now, we have a large demand of people wanting to buy homes, especially homes with larger spaces, considering a lot of people are now working from home. But there's not enough houses on the market to supply this demand. So what ends up happening is these buyers compete against each other in the market, and this bids up the prices higher and higher. So you might be wondering why housing inventory is so low. Well, there's a few reasons. One big reason was that the illness that started last year in March caused a lot of people to reconsider selling their homes. In a survey done last month by the National Association of Realtors, 43% of homeowners said that the pandemic delayed their plans to sell their homes, while a quarter said that they are going to be selling their homes in 2021, and 22% reconsidered selling their homes at all. Another reason housing inventory is at a record low is that since the housing bubble burst in 2008, we've seen a very big increase in demand for houses, but new construction just hasn't been able to keep up. This, of course, has been amplified by buildings not wanting to construct homes during this time of economic uncertainty caused by the illness. This, combined with the shortage of construction workforce and lumber prices literally tripling in the last year, has made home building just not seem as attractive as it once was. And this all has this sort of cascading effect on homeowners that are looking to sell their homes because they realize the low inventory will affect them too. They realize that if they sell their home, then they're gonna have to compete with all the other buyers in the market to buy homes in this crazy red hot housing market, and they'd just rather not do that. So now moving on to one of the arguably biggest reasons for this crazy market right now, and that is historically low interest rates. So right now, the average 30-year fixed rate mortgage in the United States is hovering just a little under 3%. And while this is an increase from the record low rate that was in January at 2.65%, 3% is still an incredibly low interest rate. And this slight increase in interest rates certainly has not slowed down the rise in housing prices. So how exactly do low interest rates cause house prices to go up? I feel like this is a concept not really covered in a lot of videos that I see on the housing market. Well, interest rates and prices are inversely correlated. So when mortgage rates are low, that means you don't have to pay as much in monthly interest payments. So for example, let's say you've looked at your budget and you've worked out that you can afford to spend a maximum of $1,000 on your mortgage payment. You then go to a mortgage calculator and you work out that at a 4% interest rate, you can afford to buy a home that costs $262,000. But then the Federal Reserve decides to lower interest rates and mortgage rates as a result drop to 3%. Then when you put that new interest rate into the mortgage calculation that you did before, you find out that you can suddenly afford a home that costs $297,000. But if this is true for you, then it is also true for everyone else looking to buy a home. So this makes it possible for buyers to afford houses that they previously couldn't before, which drives up the competition between these buyers, whilst also allowing people to bid higher on houses that they really want, which drives up the sell price of these houses. So in the last year, people have been trying to take advantage of these low interest rates by buying a home or refinancing the homes that they already own. Moving forward, the Federal Reserve have said that they're committed to keeping interest rates low while the economy recovers from the pandemic. So it's very unlikely that we'll see interest rates rise anytime soon. So moving on to one of the huge, and I consider one of the main reasons why house prices are skyrocketing. And this is one that I haven't really seen covered in any other video on this topic, but it's what people are calling the institutionalization of real estate investors. So what this is large real estate investment trusts, private equity firms, and pension funds buying up massive numbers of single-family homes as an investment to rent out. This all started back in 2012, with home prices remaining near bottomed-out levels following the Great Recession. Blackstone, one of the largest real estate investors in the world, founded a company called Invitation Homes with the intention of buying tens of thousands of single-family homes across the United States. And they've had tremendous success buying out these homes at post-housing crash prices and renting them out. Now, the last 3 years or so, these real estate giants have found it very difficult to achieve good returns in other commercial real estate classes, such as multifamily apartment complexes. So in chase of greater returns, they've decided that there's a huge opportunity in investing in single family homes on a large scale like Invitation Homes has. So now there are dozens of these large institutional investors buying up billions of dollars of real estate. So this literally means that if you're trying to buy a home right now, you are very likely competing with a large real estate fund. And unfortunately, it does get worse. So my husband actually works for one of these companies, and he tells me that they literally look at every single house that comes up on their MLS in the market. On top of that, they also have a team of real estate agents that actively source off-market deals for them. To sum it up, this basically means that they're putting in an offer on any good deal that hits the market, which makes it a lot more frustrating for people just looking to buy their first home or rental property. And did I mention that they pay all in cash? And without even seeing the property in person, it makes it nearly impossible for regular people looking to buy homes to actually buy homes at good, fair, competitive prices. This is just something that a young couple in their 20s or 30s just can't compete with. So with house prices increasing a whopping 37% in the last 2 years, people are getting very worried that we're entering into a real estate bubble. However, I don't think that we'll see a housing market crash in 2021. I think that housing inventory is just way too low, and the Federal Reserve has committed to keeping interest rates relatively low for at least the next few years. Also, it's clear that the Federal Reserve is willing to inject stimulus into the economy anytime that they see cracks surfacing, which of course isn't a magic cure, but it more so just delays any problems that we might have with the economy, which isn't the best course of action in my opinion. So overall, myself and many other real estate experts believe that the housing market boom will continue for at least another couple years. In fact, John Burns Real Estate Consulting, one of my favorite sources to follow for real estate industry research, has set their estimates for real estate values to increase by 12% in 2021. However, real estate values cannot continue to rise at this rate for very long as housing becomes less and less affordable and demand drops. So this momentum at some point will have to slow down, especially if the Federal Reserve raises interest rates in the future and builders keep up with the demand for housing. We might see a slowdown in appreciation or even a decline in housing prices. But if you are looking to buy a house soon and to take advantage of this market that we're in right now, here's a few things that you can do to make yourself stand out and your offer stand out amongst all the other offers that the seller would be receiving. The first thing you want to do is find yourself a good real estate agent. You want someone who has done a high volume of sales in the past few years and is familiar with this crazy market that we're in right now. You don't want to use your cousin who has his real estate license but hasn't ever sold or bought a home before, because he might write you offers that are mispriced. You want an agent that knows the market well enough to find you the sweet spot of standing out above all the other offers, but not overpaying or competing with another buyer from California that's willing to risk it all to get the home of their dreams. Another thing that's really important is getting pre-approved for a mortgage. Being pre-approved shows the seller that your offer is serious and you can afford the offer that you're putting in. To get mortgage pre-approval, you'll have to submit a bunch of documents about your finances to your lender. They will then determine how large a mortgage they're willing to lend you and will provide you with a letter stating that. Having this letter will assure your seller that you won't back out of the deal because you weren't able to qualify for the mortgage that you thought you could. And the last thing I recommend is removing contingencies. In this competitive market, the fewer demands you make as a buyer, the more likely that your offer will be accepted. One type of contingency is an appraisal contingency, which normally allows your offer price to be reduced or gives you an out from the deal before closing, if your lender thinks that the property is worth less than you're planning to pay for it. But just know that this does come with a bit of a risk, because whatever the property appraises at, you're still gonna have to buy it at the original agreed upon price. And that's it, guys. I hope you enjoyed the video. Please comment what videos in the personal finance real estate investing space you'd like to see and subscribe for more. I'll see you in the next one.